let's forget about all the secret indicators and holy grail strategies for just a minute. Seriously, we're going to go back to the very foundation, the actual blueprint that separates the traders who make it from, well, everyone else. Today, we are going to master the mechanics of Forex orders. Let's get right into it.
And this right here, this is the uncomfortable truth of trading. So many people are out there hunting for that perfect system, absolutely convinced it's the only thing holding them back. But the reality is, you can have the most brilliant strategy in the world, but if you execute it with sloppy mechanics, you will bleed an account dry way faster than a bad strategy ever could.
You know, it's usually not the one big disastrous trade that takes people out. It's death by 1,000 paper cuts. It's all the small leaks, an order placed the wrong way, not accounting for the spread, picking the wrong lot size. These are the silent account killers that leave traders just scratching their heads, wondering what on earth went wrong.
So let's fix that right now. Every single time you trade, you're basically issuing a command to the market. And really, there are only 3 fundamental commands you need to master. But believe me, knowing when and how to use each one is absolutely non-negotiable. First up, we've got the market order. This is your Get Me In Now button. Simple as that. It tells your broker to execute your trade at the very next price they can get. But here's the catch. In a fast, crazy market, the price you see on the screen and the price you actually get can be different. That little gap, it's called slippage, and it's the price you pay for speed.
Next up is the limit order. Now, this is where you take back control. You're basically telling the market, look, I will only buy or sell if you come to my price, or, hey, give me an even better one. The big upside, you dictate your entry. You avoid that nasty slippage. The risk, though, the market might just roar right past your level and leave you on the sidelines, completely missing the move. And our third command is the stop order. Now, this one's a little different. It's not an order to get in immediately. It's more like a trigger. You're setting a line in the sand and saying, if the price crosses this line, then you can get me into the trade. It's the classic tool for trading breakouts, but it has one critical hidden feature that trips up almost every single new trader.
Okay, I need you to lean in for this one because this right here, this slide, it could literally save you a fortune. Once your stop price gets triggered, the order does not execute at that exact price. No, it instantly becomes a market order. What does that mean? It means it will fill at the next available price. And yes, that means it is totally subject to slippage. Not knowing this is one of the most painful and expensive lessons in all of trading.
Now, let's keep building on this. Every single time you enter a trade, and I don't care which of those 3 commands you use, you have to pay a little toll at the gate. It's an immediate, built-in cost called the spread. And I'm telling you, professional traders are obsessed with it.
And this visual shows you exactly why. The market always has 2 prices. You've got the bid price, which is where you can sell, and then the slightly higher ask price, which is where you can buy. That little gap between them, that's the spread. It's essentially the broker's fee for the transaction. This means every single trade you take starts as an instant small loss. Your first job is just to climb out of that hole to get to break even.
How do you know the spread before placing a trade? Well, a bit later, I'll show you an indicator we use that not only calculates your lot size automatically, but also displays the live spread on your chart.
Okay, we've now arrived at the single most important lever you have for managing your risk. And it's not your entry point, it's not where you put your stop loss. The number one tool you use to control how much money you can actually win or lose on any given trade is your lot size. Now, what's really fascinating here is how this table just lays the power of lot size completely bare. I mean, look at this. It's the same exact trade on Euro USD with a 50 pip stop. With a micro lot, you're risking $5. No big deal, right? But with a standard lot, same entry, same stop, same chart, you are now risking $500. The trade idea is identical. The consequence of being wrong is 100 times greater.
So here's the key takeaway. This is the mindset shift that defines a professional. Amateurs, they spend all their time hunting for that perfect, magical entry point, thinking that's the secret. Professionals, they spend their time carefully calculating the correct lot size because they know that's where the real game of risk is actually won or lost.
And here's the good news. You don't need to calculate lot size manually ever again. We built a Lot Size MT4 indicator that does it automatically for you. Just set your risk, for example, 2%. Then drag the SL line to your stop level. The panel instantly shows the correct lot size. No calculators, no guesswork, no risky math mistakes. If you're serious about managing risk properly, this will save you time, and protect your account. You can download the indicator from the link in the description.
So, how do we bake all of this into a professional habit? We do it with something I call the 3-second rule. It's just a simple, mental checklist you run before you ever click the mouse, and it can prevent nearly every common, costly beginner mistake.
So before you even think about hitting that buy or sell button, just take a breath and run the check. Number 1, what is the spread right now? Is it unusually wide for some reason? 2, what's my pip value at this lot size? Do I know, down to the dollar, exactly what I'm putting on the line here? And 3, is there any major news about to drop? Could volatility just explode and make a total mockery of my plan? This little checklist forces awareness.
So what we've just done here is we've basically installed the operating system of a professional trader. These core mechanics, the order types, the costs, the risk, this is the foundational knowledge that separates gamblers from calculated risk takers. You now understand the true financial weight behind every single click you make. All right, let's lock it all in. A market order is instant, but you can get slippage. A limit order gives you your price, but you might miss the trade. A stop order is a trigger that becomes a market order. The spread is your unavoidable entry fee. And the big one, lot size, is your absolute control over your financial risk. This is the bedrock.
So the information isn't the problem anymore. We've laid out the architect's blueprint for how the market actually works, how all the orders, the costs, and the risk fit together. The only question left is, now that you have it, what are you going to build?